Okay, let's take a deep dive into the highlights from the EID Parry conference call for Q4 FY25. This is where we dig into the numbers and the insights from their latest update.
Absolutely. And there are some interesting dynamics going on, both globally and right here in India, stuff that really impacts their performance.
Right. Starting big picture then, the call mentioned the global sugar market, still tight. The deficit for 24-25, it actually widened, 3.9 million tons.
Yeah, it did widen. That really just underlines how tight supply was this past season. A lot of it comes down to weather.
Weather issues. Where specifically?
Key places like Thailand, parts of Brazil had problems. And looking ahead, 25-26 is projected to have a smaller deficit, maybe 1.5 million tons, but it's still a deficit.
So that suggests prices globally might stay kind of firm.
Probably.
Yeah.
Generally good news for producers like EID Parry, prevents a total price collapse even if, say, Indian supply picks up.
Okay, and speaking of India, the FY25 production estimate, still 30.3 million tons.
That's the figure they're sticking with, yeah. But the real positive note was about next season's cane.
Ah, right. Better outlook there.
Definitely. They mentioned timely monsoons. They expect that to really help cane availability for the 25-26 crushing season.
More cane means potentially more crushing, more sugar. Makes sense.
Exactly. It sets a better foundation for next year's volumes.
Okay, let's drill down into their actual Q4 numbers. Sugar crushing itself was down a little, 17.4 lakh tons.
Yeah, 1.74 million tons. Just a slight dip from the previous year. And that meant sugar revenue was off by about 2%.
Why was that exactly? Price wasn't the main issue.
No, the company said it was mainly about the timing, the government's monthly release quotas.
Ah, how much they're allowed to sell each month.
Precisely. So if a bigger chunk of their allowed sales fell into the next quarter, Q1, then Q4 revenue looks a bit lower. It wasn't necessarily weak demand, more regulatory timing.
Got it. But costs are a different story. Cane costs were flagged as rising.
Oh, yeah. Big pressure point. Costs were up quite a bit year on year in Q4,
Hey.
mostly because of those FRP increases.
The fair and remunerative price the government sets.
Exactly. That's a fixed cost hike they just have to absorb. So it definitely squeezes sugar margins if sugar prices don't, keep up.
Okay. But the distillery side performed better?
Much better, yeah. That was a strong point in Q4. Revenue up 20%.
Wow. What drove that?
Mainly volume. They sold more ethanol. And they also got slightly better prices, better realizations per liter compared to the year before. The blending program provides that steady demand.
So distillery's good, but challenges are those rising cane costs, which hit both sugar and ethanol indirectly, right? And you mentioned ethanol prices based on molasses haven't moved much?
That's right. Those molasses-based ethanol prices have been pretty stagnant for about 3 years now, which adds to the margin pressure there. And then there's the refinery business.
How did that do?
The refinery had a tough second half, especially Q4. The problem was low weight premiums.
The extra price for refined white sugar over raw sugar.
Exactly. Global refined supply went up, so that premium just narrowed significantly.
Yeah.
Made the refinery less profitable. It's kind of a separate market dynamic from the raw sugar deficit we talked about earlier.
Interesting. Okay, so looking forward, how are they planning to handle these pressures? Better cane availability is one opportunity.
Yeah, they expect higher crushing volumes next season because of that improved cane outlook. To help with the sugar margins, they're focusing more on higher value stuff.
Like
Refined sugar, which generally gets a better price, and expanding their consumer packs the branded sugar you see in stores. That avoids some of the bulk market ups and downs.
makes sense. Get closer to the consumer. What about the refinery?
They expect refinery performance to get better. The feeling is those white premiums should recover somewhat globally.
And consumer products generally? Any
Yeah.
targets there?
Yeah, they're pretty aggressive. They want to grow faster than the overall market rate, which they see is about 12%. So aiming high on that front.
So it really sounds like a balancing act, managing the regulated bits, the costs like cane, the quotas, while trying to build up these higher value, more market-driven segments.
That's exactly it. Their success really hinges on executing that pivot. So they build that consumer brand effectively while keeping a lid on the core commodity business costs.
It's the core tension, isn't it? How well they manage that balance between government influence and market opportunity. That's the key thing to watch, I think.
Agreed. It's a complex mix they're dealing with.
Fascinating stuff. Thank you for listening. Share it with someone who may need it.